Hi, everybody. Hi, everybody, and welcome to our next live stream. This is the second live stream that we've done, and hopefully the technology works a little bit better this time than the last time. We've made some improvements to make the viewing better for you. As a reminder, there are a couple of things to note about the live stream. First is that there are three types of questions that we get asked. One is very specific, and the answer is always going to be the same. 1 plus 1 will always equal 2. The second is those that are applicable to most people, meaning that it probably is the answer you're looking for, but you shouldn't rely on it for a decision without doing a lot of due diligence yourself. And the third is questions that people are asking that really are kind of top of mind. There's more than one right answer, and I'll frame the response in a way that lets you know that this is what I'm thinking that you might have meant about the question, but again, just like the second type of questions, it requires a little bit more than just a quick response on a live stream. In fact, I had somebody ask me about a very specific scenario about their own 401k last time, and should they hold off drawing from their 401k or take Social Security early, or take Social Security late and then draw from their 401k early. Well, there's not nearly enough data, so I just framed the answer for things to think about. Today, I am also joined by my trusted administrative partner, Jill. She will be asking questions from both the live stream and a few extras from when we had a few extras from before the live stream. So, Jill, can I ask you to get us started on the first question that you have, and then we'll go right to the questions on the live stream. Let's get everybody started.
Yes, absolutely. And welcome, everyone. And while we're getting started on the questions, I encourage you to please put your questions into the chat box so that we can have a really lively conversation here during the live stream. Also, some of the topics that we would encourage you to put questions in the chat box about would include things such as survivor benefits, taxes on Social Security, dual entitlement, when to file, spousal benefits, divorced spousal benefits, earnings test, accuracy of the Social Security estimates, longevity of trust, Doge, and suspending Social Security benefits at full retirement age. So those would be some of the topics. So go ahead and keep putting questions into the chat box, and I will then be feeding those questions to Geoff as we go. So the first question came from a question that was written in. It says, it's in regards to survivor benefits, and it says, will my wife receive a larger survivor benefit if I start collecting at age 70 instead of at full retirement age?
Yes. So the short answer to that question is yes. If she's drawing your benefit, meaning that she's the survivor and she's taking your Social Security over as a survivor, she gets exactly what you were taking. So if you took Social Security at age 67, that's full retirement age, she get 100%. If you took it at age 70, she get 124%, assuming that your full retirement age is age 67. The survivor benefit it really has two calculations. One is how old was the person when they took Social Security? And if they didn't take Social Security, how old were they when they passed? If they were under full retirement age, the SSA assumes that you were at full retirement age, and they give you the credit for that, so you get 100% or your survivor gets 100% of the benefit. If you were older than full retirement age, the date of your passing would be the assumed date that you started drawing Social Security. There is a second calculation, which is how old is the date of your spouse, or the age of your spouse. If your spouse is under full retirement age, the payment gets discounted because the spouse's own age comes into play as well. If your spouse was age 67, they'll get 100%, but they don't go above 100% of your Social Security payment. So if your spouse is older than full retirement age, they would want to take Social Security at full retirement age, or the survivor benefit at full retirement age.
All right, great. Okay, so we have a many-part question that came in from Milrat. Not sure what the name is, but so I'm going to give you it in pieces. Part 1 is I'm 63 years old and 1 month, fully retired. Spouse is 62 years and 2 months, fully retired. Currently living on T-bill savings / interest. AGI is 55K, consisting of interest income and traditional IRA rollovers to Roth. I don't plan to take Social Security until 65 to 67, which is my full retirement age. I was the major breadwinner with estimated Social Security benefit of $3,400 if I wait till 67. Spouse earned considerably less with an estimated Social Security benefit of $420 if she waits till 67. Can she start taking Social Security early based on her earnings today, which would be about $290 per the Social Security site, and later change to the spousal benefit after I start my Social Security benefit?
So the answer is yes, and you can always go from your own benefit to the spousal benefit. There is something called dual entitlement, which means that if you take your own social as the spouse, there's something called dual entitlement, which means that if you take your own Social Security, that piece of the bigger payment is deemed to have started when you drew it, at the age that you drew it. So, for example, if your spouse took it at age 62 and 2 months, and their amount was $290 of their spousal benefit would have been deemed to have been drawn at 62. So it won't be quite 50%. It'll be a little bit less than 50% because of that small amount that you took at age 62.
Okay, and then the last part to that is then likewise, if I started my Social Security benefit early at age 65, my estimated benefit would be $2,900 per the SS website. So her spousal benefit would be $1,450. Is that correct?
No. So there's a distinction here. For the spousal benefit, it's all about the age your spouse takes the spousal benefit. So if your full retirement age benefit was $3,400 and your reduced benefit was $2,900, if your spouse waited until full retirement age, they'd get half of your $3,400. But and that's regardless of when you took your Social Security benefit, because the SSA will give you more payments but smaller amounts if you draw early, and larger payments but less of them if you draw late. So if your spouse waits until their own full retirement age, well, they get 50% of your Social Security payment at your own full retirement age, even if you took Social Security early. But, and there's an important distinction here, you need to file for Social Security yourself for the spousal benefit to kick in. So your spouse can't take the spousal benefit until you've gone first. So if your spouse wants to file for the spousal benefit, you have to have started taking your primary benefit.
Okay, next question is from Chris. Thank you for your question, Chris. I may soon be forcibly retired from the USG. I have a RIF date. Thus, might need to take Social Security at 62 years and 6 months with a spousal benefit for my 70-year-old bride. Do you see any reasons to draw down investments rather than claim Social Security early? Our total Social Security benefit will be $4,500 per month, and investments could make up the difference if the tariff war is postponed. But given our age gap, perhaps an early claim for Social Security is advantageous.
So there are 2 or 3 things to think about. And by the way, this is the third of the 3 types of questions, which is I'm going to frame the answer for you because there's a lot of information here, and I don't know you personally. There's a lot of information here. First, your spouse, who's 70, is beyond full retirement age. So they can only get 50% of your benefit no matter what. So if they filed at 67, assuming that that's their full retirement age, they would get 50% of what your full retirement age benefit would be, regardless of when you filed for your own benefit. You just have to go first. So the question is, are you better off filing early and taking a smaller payment at 62 years and 6 months? That's just over 70% of a full retirement age benefit. Or are you better off filing later? My view is if your spouse is 3 years past her own full retirement age, then you probably would want to go earlier rather than later. But again, it depends on a variety of factors. Does your spouse still want to work? Is there other income coming in besides what's in your 401k? The return on your portfolio is important, of course, but it's not the only determinant. The big one for me here, though, is that your spouse maxed out their spousal benefit 3 years earlier at age 67. They're not going to get any more than 50%, but they cannot go until you file for your own Social Security. So really, it's about how long you want to go to maximize your own Social Security. The difference between 70% and 100%.
Okay, great. A lot of questions in this area of spousal benefit. So let's see. Matt says, I'm confused about spousal benefit. So this is kind of moving back to a little bit more general. I'm confused about spousal benefit. I'm the spouse and have been on disability for 10 years. So just want some basic information about it.
So the question is, how does the spousal benefit work? So the spousal benefit, just generally speaking, there are several types of benefits, but one is the primary insurance amount. That is for the person whose payment is made based on their own work history. And then the spousal benefit is based on that same work history. So if the spouse is a stay-at-home mom or dad, they never worked, they can get up to 50% of the primary insurance amount, depending on when they file. There are certain things that you need to realize about the spousal benefit. One is that an ordinary worker, someone who's working and their work history is what determines the size of their Social Security payment, they need to have what are called work credits. You need to have 40 work credits in order to qualify. You could make $1 million a year for 8 years, but if you don't get 40 quarters of credit, basically 10 years of credit, you're not going to qualify for Social Security, even though you made $8 million and you paid a lot of tax. So the primary insurance amount, the primary insured has to have 40 credits. The spouse does not. The spouse doesn't ever have to work, and he or she will get the spousal benefit based on the age in which they claim their benefit.
Okay, great. So next, Tommy asks, Tommy from Alabama, welcome.
Hi, Tommy, welcome.
Just got a $5,400 hit because Obama regime took Delphi pensions, salaried pensions, went back to work, now 81, and my Social Security was fully taxed again. Just not fair. I lost my wife 100 weeks ago at 61 and never got to draw a check. Oh, so no question, just a comment. Thank you for the comment.
Oh, well, it sounds like a very unfortunate situation. We wish you the best, of course.
Okay, Keith, thank you for putting your question into the chat box. He also had emailed it in. Are 401k withdrawals considered income towards receiving early Social Security at 62? And how much can you make while receiving early Social Security?
So a 401k withdrawal is not considered income for Social Security. This is a question about working while receiving Social Security. Basically, there are only two types of income that qualify or penalize you for Social Security. One is earnings from an employer, or self-employment earnings from work, from a job. Not your 401k, not a pension, not investment returns. None of those count towards the the limits with a working while collecting Social Security. If you do work while collecting Social Security, there are limits that are in place, and the one that most people need to pay attention to is what happens in every year but your full retirement age year, and that is you are allowed to earn a certain amount of money. You're not allowed to earn unlimited amount of money. You're allowed to earn $23,400 up until your full retirement age year. Anything beyond that, you have to give back $1 for every 2 over that amount to the SSA. Now, the SSA doesn't take this information, or doesn't take this money and keep it. They put it back into your account, so to speak, and you get a higher payment, a higher Social Security payment when you reach full retirement age. And by the way, once you reach full retirement age, you can earn as much as you want. You can earn $1 million a year, $1 billion a year, it doesn't matter. But you, at that age, you don't have to worry about the give back to working while collecting Social Security.
Okay, next, Tammy and Peggy, 2 separate check-ins on the same question. When the highest earner is retiring at 67,
Yep.
when should the spouse retire to maximize their Social Security check?
So the primary earner retires at 67 and draws Social Security. When should the spouse claim the spousal benefit? I think that's the question. If they want to maximize the spousal benefit. Again, the spousal benefit is based on the age of the spouse, not based on the age of the primary insured. So to maximize their spousal benefit, which is 50% of the primary insurance amount, they would want to wait until they reach their own full retirement age. For most of you, that's either 67, or if you reach full retirement age in 2025, it's 66 years and 10 months. But just like I mentioned before, the spouse can't, unless we're talking about a divorced spouse, which is a different issue altogether, but a spouse who's married does not qualify for a spousal benefit until his or her partner files for their own benefit. So that's a long way of saying when you reach your own full retirement age.
Okay. Welcome to Brian calling in from Pittsburgh.
Hi, Brian.
Matthias from calling. So excited to learn about Social Security. Good evening, Dawn. A lot of people just sending in lots of good comments. Okay, Hugh has a question. I have 25 years of U.S. Social Security and 10 years of UK equivalent. So can you just add my UK to my U.S.?
It depends. So there are agreements between the U.S. and the U.K. that in some instances allow for the Social Security payment you paid to your benefits in the U.K. to count towards the benefits that you would receive in the U.S. and vice versa. Usually, by the way, for those that are wondering what I'm talking about, if you're working abroad, and this is a very small number of people, you would talk, I think the number was 147,000 people in 2024 actually had this particular issue. But there are the ability, there's an agreement between certain countries, and I think there's 17 of them, where if you are a citizen of another country and you're working in a foreign country and you're paying tax, their equivalent of Social Security tax in that foreign country, then that will count back in your home country, and vice versa. But the number is small, and people also often get this confused with people that come from other countries and try to bring that work history with them. That's not what this is for. And again, it's less than 150,000 people per year that we're talking about, but it's really for expats, people who worked abroad, but were working in the U.S. for the majority of the time that they were here, or at least were U.S. citizens, and then they're coming back home.
All right. Linda asks, when Trump says he wants to get rid of Social Security taxes, does that mean it'll happen this year?
Well, so I don't know the answer to this. Based on everything that I'm seeing, you have a couple of different things. You have there is a tax bill that's being prepared, and there's the way that everything works in Congress, by the way, is that some member of one of the two legislative bodies will prepare a bill. They'll get that legislative body to support it. They'll get the buy-in from the other legislative body before it gets sent over. The other legislative body, if it looks like it's good to go, will make some adjustments of their own, and they go back and forth. I don't think we're at that point yet. So the no tax on Social Security was a campaign promise from Donald Trump, and I will say it would take Social Security back to 1983. And for those of you that don't know the history of Social Security, in 1983 there was no tax on Social Security, but because there was this really big hole in Social Security, and in 1983 the Social Security Administration was 2 months away from running out of money in the trust. If you think 2034 sounds pretty scary, imagine 2 months from now, because that's what was happening in 1983. And the politicians all got together and they passed the Social Security Act of 1983. They amended the Act of 35, basically, but they passed the Social Security Act of 1983, and they did three things. The first was that they raised full retirement age, but they didn't raise it for people that were retiring within the next 18 years. I believe it was 18 years. So if you were, say, 48 or older, your full retirement age was always going to be 65. But the younger you got, the more likely your full retirement age was going to be raised. The second was that the tax on your payment, or the tax on your check, went from 5.4% to 6.2%, and the employer match did the same thing. That happened immediately. So everybody was affected by the tax increase, and the people that were younger than 48 were affected by the increase in the full retirement age. I suspect, because this is a question that comes up all of the time, they say, Geoff, please crystal ball what's going to happen to the Social Security Trust in 2034. I suspect it's going to be something similar. Imagine, and I mentioned this on the last live stream, but imagine 57 million people who are receiving Social Security suddenly lose a portion of their Social Security payment because the trust runs out of funds. Whatever politician let that happen isn't going to be in office the following year or two. So I suspect that was the pressure in 1983. I know that for sure, but nobody wanted to do it at the time. Everybody wanted to keep kicking the can down the road because they didn't want to be the politician who took a punt on something that was not popular with everybody. And politicians, they'll get there eventually, but they almost all don't want to do anything that's too controversial usually anyway, too controversial for a big portion of the voting base.
All right, great. Gary has a question. If a significantly lower earning spouse is also the lower earning person, if they file at 67 to maximize their benefits, can they switch to spousal benefit once they retire later?
Once the other spouse retires later? Yes, you can. You can start one and take the other. There isn't a limitation on that. But again, just going back to the dual entitlement point that I made earlier, this is a very complicated issue for people, and it's not really well written in most textbooks because it's hard to explain. But the Social Security Administration will give you what you were supposed to receive on the other benefit when you file for the first benefit. Now, everybody at this point is scratching their head saying, what are you talking about, Geoff? Well, if you're at 62 and you file for the spousal benefit, and that was, I'll use an example from earlier, that was $290 a month, but your own primary insurance amount was $1,000 a month, 290 of that 1,000 is frozen at age 62. The balance continues to grow until you file for, in this case, let's assume full retirement age. So a small portion of what you would have received doesn't actually go your way. It's called dual entitlement. It's a very complicated calculation. Actually, it's not a complicated calculation. It's hard to explain. But actually, I'll put a link to a video in this live stream in the description when this is all over, so that you can actually do it yourself. It's not that difficult a calculation. It's just a difficult idea to describe without a chalkboard in front of me.
Okay, great. So Cincy has a question. How long do you have to be married before the spouse with the lower benefit can collect 50% of the benefit of the spouse with the higher benefit?
Like anything, it depends. It depends on if something happened to the spouse. But the answer is 9 months. Usually it's 9 months. The there the survivor benefit has a very similar question, but a lot of it depends on when the spouse, what happens to the spouse and the survivor benefit, and if there are children involved. So, but 9 months, generally speaking.
Okay, Michael's question is worried about current administration changes to Social Security and their staffing. Will remaining Social Security Administration staff still be able to answer questions and make changes as needed?
Yes, yeah. So I put a video out a couple of days ago, and the reaction actually wasn't what I was expecting. It was informing people of what was going on at the SSA and the changes that were all being made there, and they were administrative. And one of the comments that I made on the video, in fact, a big focus of the video, was that there was a clawback provision for people that were that had reached or that were overpaid, and immediately, like anything, there's a political undertone there that really wasn't meant to be there. But basically, what I said in the video was, if this has happened to you and you feel like either it's done in error, or if it's happened but you in good faith didn't know that you were being overpaid, which, by the way, is the vast majority of people in this situation, you can file an appeal and you can postpone and you can push into a bunch of other things. But the second part of the video is what's happening at the SSA, and the staff has gone from 50,000 to 57,000 down to 50,000, and because of that, there are a lot of there are staffing shortages. There's just no easy way to say it, and whether you agree with it or not, the staffing shortages are things that you need to deal with, which means that you need to file earlier. If this is the first time that you're filing for Social Security, you file 4 months in advance. Some people have done it as early as 3, and some people will try to thread the needle and do it earlier or later than that. But I would recommend taking the full 4 months. You can also take all of the forms that you need to file, download them from My Social Security, and get them in as early as possible. Time is not on your side when it comes to filing paperwork with the SSA right now. Now, like anything, nothing lasts forever. Things will eventually get better. But in the meantime, until the SSA has found its new rhythm, because they're a bunch of really good people. These are good people at the SSA. They're trying their best. They're there to serve. I do believe that. I've talked to many of them. And so if they are overwhelmed, they'll get to you. Just give them extra time. You're not going to get lost in the shuffle, put it that way.
Okay, great. Lester is asking, am I grossing up for my Social Security taxes? I am grossing up for my Social Security taxes. Will the money taken out for my taxes be counted in my provisional income for the next year's taxes?
So the question is, this goes back to category number 3, because a lot of people, even if you have taxes on Social Security, because you exceed the provisional income limits, aren't going to pay taxes on Social Security because you have other deductions. So for those of you who who will have a hard time sleeping tonight unless you know the answer to the really, there's a book about 2 inches thick which will explain this, but the way that taxes on Social Security work is, if you pay taxes on Social Security, you either pay 50% taxes on 50% of your Social Security, up to 50% of your Social Security, if you fall within one income level, and up to 85% if you fall within another income level. But that's the taxable amount of Social Security, not the amount of tax you actually pay on Social Security. So people get those two confused. They think I have to pay 50% away on my Social Security. No, just 50% of your Social Security income, up to 50% or 85%, is taxable. But if you take that and then you put it into your normal TurboTax, or if you use a CPA, which is always a good idea, by the way, if you use a CPA to do your taxes, and there's a very good chance they're going to come back and say, yep, this was counted as income, but because of other deductions, you don't owe any money on your taxes. And it's a reasonably high threshold in retirement. So the answer to your question is I'd really need to see your tax return to answer that question.
All right, next question is from Kurt. I'll be 65 in September and have veterans health care. Why does veterans health care meet the requirement for creditable health care with the IRS, but not with the Social Security Administration?
Okay, well, I'll be doing a separate live stream on healthcare at some point in the future. So why don't we come back to that? That's probably the next live stream, and you'll all get an invitation to this. We're going to cover Medicare in great detail on that one.
Okay, great. Okay, so Doug asked, I think there's a misspelling of the first word, Dorset. Oh, does it ever make sense for my wife to file taxes as married, filing separately in order to avoid paying tax on her Social Security, since I am the high earner and will put her Social Security at 85% taxable?
I'd need to see your tax return to answer that question. This goes back to the point where a lot of information that we get is very detailed, and an answer for you might be different than the answer for your neighbor.
Okay, Brian asks, well, first he comments, thank you for doing this.
Sure.
Yes. Okay, so my question is, how do you feel about life insurance in retirement to protect against loss of Social Security income?
Life insurance has a strong place in planning for your future. I think that there's a very, very real reason people take out life insurance. So life insurance, and this isn't a live stream on life insurance or financial planning, it's on Social Security, but life insurance, I have strong views on certain life insurance products and think that sometimes they're okay, sometimes they're not. But pure term life insurance to protect those that you care about in the event that you pass I think it's generally a good idea. That's me, Geoff Schmidt, speaking. It's not, again, because I don't know your situation. I don't know if you have $10 million in your checking account and you want to take out a $1 million policy just to make sure that they can buy the extra car or 10. But as a general observation, life insurance serves a very good purpose in protecting those that you care about. So I think it's worth discussing with a professional on this, on your specific financial situation. But if you ask me what I'm inclined to think that I'm leaning more towards I think it's something worth spending time on and analyzing. It's not a no, put it that way.
Okay, Don Ricky asks, if one spouse dies, will the other spouse receive the higher of the two, regardless of the age they received benefits?
If one spouse dies, will the other spouse receive the higher of the two? Yes, but, and it goes back to my point about the spousal benefit. Yes, but let's just say that you have one spouse who was 75, and this is the one that passed, and they took their Social Security at 70, so they got 124% of their Social Security payment, approximately 124%, just using age 67 as their full retirement age. And the second spouse is younger. Let's say that he or she is 62. That 124% is going to be haircutted by the age of the survivor. If the survivor waits until their own full retirement age, then they'll get 100% of that 124%. If they file early, it's going to start ticking down, and it's going to be a smaller number. So a lot of it depends on the age of the spouse when they claim the survivor benefit.
Okay, Jean is asking, I'm divorced, married 22 years, and never remarried. If my ex's Social Security is greater than mine, can I take his instead of mine? And if so, how do I go about this? I'm 64, he's 69 and still working.
Yep. So this is the divorced spouse benefit question. And normally when you're married, so when you're married, your spouse has to file for their own Social Security, full stop, for the spouse to get the spousal benefit. When you're divorced and you haven't remarried and you're over 60, and there are a lot of there's a lot of information here that's really good, then you still qualify for the spousal benefit. And if you've been divorced for more than 2 years, you don't need to wait for your partner or your ex-partner to file for their own Social Security. So it's decoupled after 2 years of divorce. If it's within 2 years of divorce, then you have to wait until you get to 2 years or until they file for their own Social Security benefit, whichever comes first.
Okay, great. Some people are asking if you could just speak a little bit louder. So maybe we'll move that over. Okay, Rebecca asks, if I retire at 65 and get a check and I work, and can I only make 26,000, but the next year can't you make 62? So
the question is, there are two tiers of Social Security. What happens up until the year you reach full retirement age, and what happens in your full retirement age year. In your full retirement age, up until the time you reach social, up until the time you are in your full retirement age year, you can earn a total of $23,400. Anything beyond that, you have to give back $1 for every $2 beyond that amount. Now, this is an interesting one, because the dilemma here is what happens if you already made $23,400 the year that you filed for Social Security. Let's just say that you were a big earner and you made $50,000 in your first 9 months and you filed for Social Security at the end of September. Does that mean that you have to give back half of 50,000 minus 23,000? So it's roughly 26,600. Half of 26,600, $1 for every two that you're over. No, the SSA has a first year rule that says in your first year, it's reduced to a monthly benefit for that very scenario, because until you start drawing Social Security, the clock starts ticking. It stops ticking. It doesn't start ticking until you start drawing Social Security. In your full retirement age year, that amount goes up to $62,140, I believe. I'll need to check that in just a moment. And the same rules apply. So, except for, instead of $1 you have to give back $1 for every $2 over that amount. It's $1 for every $3 over that amount. And so, and then once you reach full retirement age, then it's you can earn as much as you want. You can earn $1 million a year, and you don't have to give back anything to the SSA.
Okay, great. Okay, so Julia asks, I'm a widow and still working. I plan to start to draw Social Security when I reach 67 in 2 years. At that time, will I be able to claim both my own benefit and my widow's benefit?
That's an unfortunate, I think you should, but the SSA will only give you the larger of the two. Now, what they do, and this is unique to the situation, is that you can take one and let the other grow. So, for example, if you had two identical benefits, and let's just say each was $1,000, you could take one, and this would probably be the survivor benefit, and let your own income or let your own primary insurance amount grow, because the survivor benefit caps out at 100% at full retirement age, whereas your own benefit can actually grow until age 70, up to 124% if your full retirement age is age 67. But unfortunately, and there is a lot of talk about changing this, by the way. It's one that I've never felt was appropriate, but it is the way that the legislation was drafted. You can choose the bigger of the two.
All right, great. So Victor asks, my wife has worked for the state as a teacher and only paid into Social Security for about 7 years of her 38 years of work. Can she still get half of my Social Security?
So these are two different things. One is she paid into Social Security first. So there are three data points here. One is that she was a teacher, so the windfall elimination provision was eliminated. The second is that she paid in for 7 years, which is under the 10-year limit, which is what I think you're asking. And the third is about the spousal benefit. So your wife can claim your spousal benefit, and she gets 50% of your spousal benefit if she claims at full retirement age, her own full retirement age, full stop.
Okay, someone that refers to themselves as a dog and his lawyer is asking, retiring at full retirement age in June. My wife is 54. If she takes her Social Security at age 62, can she still get my full Social Security benefit upon my death?
Yeah. So yes, the survivor benefit doesn't have dual entitlement. So the dual entitlement issue is the spousal benefit, not the survivor benefit. But your spouse will get the higher of the two. So they can't take their own and yours. They get either theirs or yours, whichever is higher. And in the example I used just a minute ago, a lot of people, if they're close, will take the survivor benefit and let their own benefit run up, because they can run their own benefit up to age 70.
Okay, Chris is asking that once you apply for Social Security, how long does it take to get your first check deposited?
Normally, it's 3 months. So you should apply for Social Security at least 3 months in advance. I would recommend 4. There won't be a situation where you applied and it took long. It could take longer simply because of administrative issues, but the SSA will give you the additional funds back that you were supposed to get while they were trying to figure out how to pay you. Right now, if you've got 50,000 people doing the job of 57,000, I could see a real scenario where it doesn't take 4 months, it takes 5. But because of the way that the rules work, the SSA will give you back the additional month that you should have gotten as a top up to your original check or your first check.
Okay, Annie's asking, should someone who owns a couple of rental homes take Social Security at 62?
Depends on how you classify the income from the rental home, I suppose. Rental income is either passive or active, and if it's a job, if it's considered a job by the SSA, remember when I said that the SSA looks at income and they say that there's either income from an employer or income from self-employment. Property has a lot of different ways to look at it. It's a wonderful investment in many ways, because you can take depreciation on the property, even though the property isn't really depreciating. You can take the value of the amount that you pay to upkeep as a current expense. There's a lot of big tax benefits. But if this is a job, or if it's classified as income, well, then anything that's classified as income will be something that you will be limited in how much you can earn before Social Security. You have to start giving back to the SSA.
All right, Julia is asking, I am a widow and still working. I plan to start drawing Social Security when I reach 67 in 2 years. At that time, will I be able to claim both my own, I think we might have answered this one, own benefit and my widow's benefit? Did you answer that one?
I answered that. It was for somebody else, but it was the same question. The answer is no. You can claim one or the other, and people will take one and let the other grow, generally speaking. And then, if the opportunity to take a higher benefit later is there, you have the benefit, no pun intended, of having income from one while the other one is growing.
All right, Raphael says, I will be 64 years old in July. I currently earn $100K a year at my job. If I wait until I'm 67 to file for Social Security, I'm scheduled to receive $3,400 a month. If I continue to work, can I be limited in earnings?
Once you reach 67, you reach full retirement age, you can earn as much as you want. And the SSA won't require you to give anything back. And so, no, you won't be limited in your earnings. That rule only applies if someone is under full retirement age. But once you reach full retirement age, you're good to go.
Okay, Mike is asking, how can we find a Social Security advisor near us? All the financial advisors I've contacted just want to talk about taking our assets under management.
Yep. This is a real issue because they're two distinct skill sets. One, and there are some wonderful, overwhelmingly, especially if they're a fiduciary, a financial planner, is a life changer for people, a game changer for people who have a reasonable amount of savings. And I say reasonable. I'm not talking about millions and millions of dollars, but they can get you to see things that you wouldn't normally see. But there are a lot of DIYers out there that do their own financial planning, and they study it. They make sure that they understand all of the issues. But Social Security is a complicated beast. The reason that we have this live stream is to help make it less complicated, but it is complicated because the Social Security website has 100,000 pages. That would fill a room with pages. And if you look, I've got a binder that's sitting on the floor here. It's 6 inches thick, and those are my cliff notes of those 100 pages for 2025. So to find a Social Security advisor, someone to advise you just on Social Security, first of all, you don't really need to look for a fiduciary if they're not going to be managing your other money or helping you manage your other money. But a fiduciary is always a good starting place because they legally have to have your best interest at heart. But they are going to want to manage your own funds. The RSSA is the NRSSA, the National Registered Social Security Association, has a list of Social Security specialists. I'm on there, and those individuals can help advise you on your Social Security. If you send me your information at livestream@holyschmidt.com, I'll give you all the details on how to contact the RSSA.
All right, great. Doug is asking, does it ever make sense for my wife to file taxes as married filing separately in order to avoid having to pay federal taxes since my income puts her Social Security at 85% taxable?
I think we already asked this question.
Okay. Let's move to another question. All right. If my husband passes before me, am I able to take the survivor benefit and my own Social Security at the same time?
This question gets asked a lot. This was asked earlier. No, you can only take one or the other, and you take the higher of the two.
Okay, Jim is asking, strategically, should my wife claim as soon as 62 if she gets a much higher spousal benefit at age 63? No penalty?
There are a lot of reasons to file early, whether it's the spousal benefit or your own Social Security benefit. And I'm not an evangelist that says there'll be people out there that show you the math, and it is true that you are statistically better off waiting as long as possible to file for Social Security most of the time. And I referenced this on the last live stream. There's a report that was written that said 96% of the time you're better off waiting longer. The longer you wait, the better. And actually, it used age 70 as an example, and then incorporated a bunch of data. And the methodology was correct, but the assumption was that every single person out there is filing for Social Security to maximize the total dollars throughout their lifetime, not to maximize the total dollars for a particular issue. If, for example, you are trying to maximize the survivor benefit, that's different than if you're trying to maximize total dollars throughout your lifetime. If you're trying to maximize the survivor benefit, you're going to wait until age 70 because that's when you've reached 124% of your earnings. But that might not be the right answer if you have a family history of people that are passing away at age 72, for example. So generally speaking, think about it like this. And again, this is category number 3. You have to think about the big picture question here, which is, what are you maximizing for? And this goes for the spousal benefit too, because remember, in order to file for the spousal benefit, you have to file for the primary insurance amount. Are you maximizing for total dollars throughout your time on this planet? Are you talking about maximizing total dollars at a particular point in time? Are you trying to protect yourself against long-term care issues in the future? Are you trying to enjoy life now? Is one spouse ill and the other one's very healthy? And so these are the things that you need to think about. And unfortunately, the answer isn't clear cut because it depends on what you're trying to maximize for. But I do have a video on this particular issue. I'll put a link to it in this live stream. So if you come back to it tomorrow, I'll walk you through all of the issues, and it's called Why Filing for Social Security at Age 62 might be the right move for you.
Okay, Keith is asking, my wife draws her Social Security. She's 71. I'm 62. If I want my Social Security at 62, will I get all of what I'm entitled to?
No. So at age 62, whether you're talking about the spousal benefit on your wife's record or your own benefit, at age 62, you will get a reduced amount. At age 62, if you're talking about your own benefit, you get 70% of your own Social Security payment at full retirement age. If you're talking about the spousal benefit, I believe it's 32.5% of the primary insurance amount at age 62. So in either case, there's a reduction to you because you're going to be getting more payments. Always remember that if you get more payments, the payment to you is going to be less. Less payments, the payment to you is going to be more, whether it's a spousal benefit or your own primary insurance amount. Again, the spousal benefit, though, at age 67 or full retirement age, can't go any higher than 100% of the 50%. So 50%, in other words.
All right, great. So Donald is asking, he says he's 65 and he's burning through his money to delay Social Security, but he's worried he won't make it to 66. He has pretty good Social Security expected. His IRA is near $1 million. He is single. Should he use his IRA funds in delaying Social Security to 67?
This is Donald?
Yes.
So Donald, this question quite possibly was the most asked question on the first live stream. And let me frame the issue for you to think about, because I don't know what your lifestyle is like. If you're burning through $1 million in your IRA, it sounds like it's an okay lifestyle. But I would say that a lot of it depends on, number one, if you have kids, if you want to leave a legacy for the children, if you're looking to maximize your overall cash flow during your lifetime. $1 million in an IRA would put you in the top 1% of the people in this country in terms of what you have saved. But if you're spending $250,000 a year, you're going to go through that pretty quickly. So I would say that the best thing that you can do for this particular question, and I actually did do a video on this, and I did all the math for you, and we came out in the video to the conclusion, I believe, that the return on your investments had to be something like 7% and pretty risk-free in order for you to make one choice. If it was less than 7%, you were better off taking Social Security earlier. If you were more than 7%, you were better off taking Social Security later. And don't quote me on the exact percentage, because it was about 3 years ago that we did this. The one thing I will say, and I'll put the link to that in there so you can actually do this calculation yourself. It's a complicated calculation. It actually comes with a spreadsheet, which you'll have access to as well. The one thing I will say, and I made this comment on the last live stream, is that you'll hear people say, I'm going to take Social Security at age 62 and invest it. And the very next question I ask them is, okay, show me why. And they show that they show the math around taking your Social Security at age 62 and investing it, how it outperforms if you took it at age 67. And it assumes about an 8% rate of return, and it assumes a lot of things, that there's zero risk in the investments. But the one thing that nobody ever actually shows me is how they're going to fund their lifestyle from age 62 to age 67. Most of the time, they're going to have to draw down on their IRA so that they can take Social Security early to put it back into the IRA, which doesn't make a lot of sense, because you're paying taxes when you take the money out of your IRA or your 401k. You'd be better off just waiting until you were waiting later, and then using your IRA or 401k. So I'll put a link in the description to the analysis. It is rather complicated, but I will it does have a link to a spreadsheet which will help you work through the issues.
Okay, so we're going to have time for just a few more questions. We are at 3 minutes to the hour, so the time is flying. David is asking, I'm retiring at 60 with a pension and plan to file for the widow's benefit then, switching to my own benefit at 67. Are there any gotchas I should know about filing at 60?
It depends on, there might be actually. And one gotcha was, what was the age of the deceased when they either filed for Social Security, or if they didn't file, then you assume that it was at full, their assumption is that they filed at full retirement age. That's what the SSA gives you. If they filed early, then there's something that you need to think about called the widow's limit. And the widow's limit basically is something that Social Security provides to widows whose spouse, widow or widower, whose spouse filed early, and because they're young and because the discount is the payment was already haircutted down to, in this case, let's assume they filed at age 62, they're haircutted down to age 70, because the spouse is 60 and the deceased was 62, you have a discount on a discount. It's a tiny number. So the widow's limit allows you to get around this, but you do need to know how it works. And with 3 minutes on the clock, I can't take you through the math on this, but Google or go into my Holy Schmidt page, or my Holy Schmidt's site on either on holyschmidt.com or on YouTube, and I do have a video on the widow's limit. But it is a real thing, and it is something that you should pay attention to here, because the world changes if you wait to 62 years and 9 months.
Okay, the last question comes in from Paul. Are Ben points shifting the way that Social Security provides an annual raise?
No, Ben points, I call this the great equalizer, because Ben points, the Ben point, basically when you receive your Social Security payment, everybody gets the same $6, if your average index monthly earnings over the last 35 years was in excess of this, you're going to get 90% of that. And then you get 32% of the next amount and then 15% of the final amount. So it's tiered. So everybody gets the first tier, including the low income earners. The higher income earners also get the second tier and the third tier, but the Ben points don't really shift the nature of how people get paid because everybody still gets the first tier.
All right, we are at 8 o'clock, so I think it's time to
wrap it up
for today.
So, gang, I hope I answered all of your questions. I will be doing this live stream starting 2 weeks from now and then more regularly after that. But the last one I did was 3 weeks ago. I did this one, which was 3 weeks later, I suppose is the right way to describe it. The next one will be 2 weeks from now. And then I'm trying to get down to once a week on Tuesdays or Wednesdays at the same time. You will undoubtedly, I'll find you and let you know when the next one is. If you are subscribed to holyschmidt.com on our email list, you'll get an email from me. If you're on YouTube and you're subscribed to the channel, you'll get an alert from me. But don't worry, we will let you know. But thank you so much for taking your valuable time on a Tuesday night at 7 o'clock. I'm actually honored that you would do this. And I look forward to delivering great content for you on YouTube and also seeing you in 2 weeks on the next live stream. With that, why don't we wrap it up? Thanks, everybody. And thank you, Jill, for your hard work and being a great administrative partner on this live stream.
And thank you to everyone for all the love that's coming in. A lot of appreciation for what you're offering in these live streams. So thank you for that.
My pleasure. Thanks, everybody, and I'll see you in 2 weeks. Okay.
So there was